Good morning, warriors. So, in the last class, we completed what is happening in Pgbp, right? We started from section 28, which talks about the format, went into the formats, 30 to 38 talks about the deductions, 41 talks about deemed income, and then 40 to 43b, we discussed about what happens in disallowances part. Yes, we completed yesterday with the disallowances of 43b, which was the most important, like I told you yesterday, because there is an amendment to it. We also discussed the sum around it. Yes, where we told that if you have any kind of loans, which if you have any kind of interest which is converted into loans, the interest will not be allowed as a reduction unless the loan is repaid. There is a similar question like this in my book also. Okay, there is a similar question like this in the book also. I would recommend you to do it on your own. Okay, because it's a straightforward question. There is nothing great about it. Okay, the question is basically coming and saying Hari is an individual. He has been given 15 lakhs worth of interest and 30 lakhs worth of interest. Total is 45 lakhs. Out of this 45 lakhs, he's converting it into installments and then he's paying it some amount. Okay, a very straightforward question. You just have to put the numbers. Okay, try it yourself. Will be an easy question for you to answer. Moving on to today's class. In today's class, like I told you, we have already discussed what is happening in case of section 41 also. We discussed what is happening in case of 41. I told you 41 is nothing but a deemed income provision. We technically have covered this deemed income provision when we did sale of SLM assets, sale of scientific research assets, sale of specified business assets, and then any kind of bad debts recovered and all those things. We called it as balancing charge. Yes. Yes, those are the items which are discussed under section 41. So there's not much to discuss. The only thing which I wanted to probably note down and keep in mind is waiver of loans. Okay, waiver of loans. We have discussed this waiver of loans also, but I just wanted to highlight it once again. Now, what is this waiver of loans, Rahul? We have discussed the fact that if at all you give a loan to someone, and tomorrow you decide that you don't want the loan back, that is called as waiver of loan. Now, in your hands, it will generally become taxable. But it depends on various parameters. Let's say, for example, if you're taking a loan can be of two types, like we discussed. It can be a capital nature loan for buying assets, or it can be a revenue nature loan for using your working capital. Yes, if you have given a loan to someone which is in the nature of working capital, and you have decided to withdraw the loan, or waiver the loan, in that case, the whatever loan you have waived off will become taxable because it's a working capital loan. Similar comes for interest part. The only thing which you need to keep in mind is, take an example where you are supposed to pay back loan. Now you also have to pay back interest. Assuming interest was payable to bank, did you pay earlier, not pay earlier? You did not pay earlier. If you did not pay earlier, it would have been disallowed under 43b, yes or no? So when you have already disallowed in the past, today when you get a waiver, will you again offer it to tax? Answer is no, because you have already offered it to tax in the earlier years. When you were supposed to claim a deduction, you did not claim a deduction. You anyway disallowed it. Which means the income has already been offered in the past. So today, should you offer it once again? Answer is no. In case it is there in the P&L, you will automatically reverse it off. That is one thing which I wanted to keep in mind. Okay. Understand, if you have an interest on a loan which has been waived off, if the interest was already disallowed in the earlier years, because of the fact that it was disallowed under 43b, please don't offer it to tax once again, because it is anyway offered in the past years. Don't do it once again. This is nothing new. I am just giving you accounting terms. There is nothing great about it. Okay, so to the extent of interest component, check whether it was disallowed in the earlier years because of 43b. If it was disallowed earlier in the 43b, then you will not offer it to tax right now. If it is not disallowed, then you offer it to tax current year. Coming to the principal component, the working capital loan, generally if it is waived off, will be taxable under Income Tax Act. Starting this year, even the asset even the principal component taken for assets are also taxable, because we discussed Mahindra and Mahindra case. Yes, so because of this Mahindra and Mahindra case, even if it is a principal loan taken for acquisition of capital assets, that also now becomes taxable. In case in exam they ask, please be careful about it. The fact that any kind of benefits or perquisites given to you without any consideration, with part consideration, whether it is convertible into money or not, it doesn't matter. Everything is taxable. This is one simple summary for you. As such is not part of the section. As such is not part of the section. I'm just putting out a summary so that you understand better for next time. Clear? Clear? Keep this in mind. Keep this in mind. Can we go forward? Yes. Now this was the completion of 41. This was the completion of 41. With this we are technically done with what are the provisions under PGBP. What are the provisions under PGBP? The next part of it is purely admin provisions. Purely admin provisions. We'll come back to this later. We'll come back to this later. There are some special provisions on the bottom. There are some special provisions on the bottom which has been notified for final syllabus. It is notified for final syllabus. I am not going to take you through them so much in detail because it is not so relevant. It is very specific industry level. It's a very specific industry level, but let's just go through. Let's just go through. First one is called as 43 CA. First one is called as 43 CA. It is a sale of immobile assets. Sale of immobile assets. Now these are not any immobile assets. These are those immobile assets which you hold as stock in trade. Which you hold as stock in trade. Why, Rahul, stock in trade? Because if it was any other asset, it would have been capital gains chapter. It would have been capital gains chapter. So I am talking about immobile assets which are stock in trade. Yes, Rahul, am I going to discuss this right now? No, I am not going to discuss this right now. Refer capital gains. Refer capital gains. Provisions are same as capital gains, so it's better for me to discuss there. It's better for me to discuss there. Today, if I tell you, it will not be very clear enough. So this one is referred capital gains. Move forward. Move forward. Yes. Next, income from construction contracts. I am going to discuss about this in ICDS. I'm going to discuss about this in ICDS. Right now, not so relevant. When we do ICDS, you will understand this better because there it is more clearer. There it is more clearer. This is just a copy paste from ICDS because they had to notify something. They had to notify something. Yes. Next is called as interest on NPA. What is it called as? Interest on NPA. Now, NPA meaning non-performing assets, yes or no? Yes. And if you have done your inter accounts, you would have known that when it comes to NBFC or banking regulations and all, whenever you have any NPS, income recognition concept of those banks or NBFCs come and say that you will only recognize it on actual receipt. You will recognize it on actual receipt basis. That is what is clarified in income tax also. Income tax is also clarifying that if at all you have any interest income from an NPA, if at all you have any interest income from NPA, I don't expect you to accrue it every year. I don't expect you to accrue it every year because asset is already an NPA. You can offer it to tax in the year in which it is actually received. The year in which it is actually received. Now they have also put saying credit to P&L as per RBI regulations. RBI will say as per receipt only. Okay. RBI regulation says as per receipt. So technically both are the same. Technically both are the same, which means in simple words, if you have any kind of interest income coming from any banks or NBFCs, if it is from an NPA asset, you will only recognize it in the year of receipt. You will only recognize it in the year of receipt. Any other asset which is performing asset, you will recognize it on actual accrual also. Actual accrual also. This is just a benefit given to banking and NBFC regulations. Banking and NBFC regulations. Yes. Yes. And the last item they are coming and saying, in case there is any kind of business reorganization happening. What is happening? There is a business reorganization happening. The business reorganization is basically coming and saying that I am going to take over your assets. I am going to take over your assets. Income tax is clarifying that if at all someone is planning to take over your assets, in that case, whatever is the assets you are going to transfer in the nature of stock in trade. In the nature of stock in trade, the cost of acquisition for the new owner will be cost to the previous owner. Simple. What will be? Cost of the new owner will be cost to the previous owner. You learn the same provisions in capital gains. Yes or no? Same provisions in capital gains. So therefore, this is what the provisions are. You don't have to worry about it so much. You don't need to worry about it so much. The provisions are coming and saying if at all you have any stock in trade for the new owner will be stock in trade cost of the old owner. This is what is clarified. Look at it. It says cost of acquisition of the stock in trade will be cost of acquisition of previous owner plus cost of any improvement plus any expenses incurred for wholly and exclusively of the transfer. Same provisions we learned in capital gains. Same provisions we learn in capital gains. For you as an example model, I have given you the examples also. What you can add, what you can reduce, all scenarios when it is one person treating it as asset, the other person treating it as stock in trade and all those things. We will do this in detail when we do IFOS. We will do this in detail when we do IFOS. After you are aware about all the provisions of capital gains, Pgbp and IFOS, this will become a lot more easier. This will become a lot more easier. So we'll discuss when we do IFOS. Yes, can we go forward? Yes. The last items are cooperative banks and mineral oil. I think mineral oil, I told you, when we were doing this one section called as the 10 years thing. Yes, when we told that if you have any expenses which has to be amortized over 10 years, that will have a similar provision in 45, 42. That is what this provision is. This provision does not clarify much. Okay, it's a very vague provision. We don't even understand it so much. The provision simply comes and says that if you are planning to do any extraction of mineral oils and all those things, these following expenses are allowed as a reduction. The following expenses are allowed as a reduction. Read the expenses. No, it says infructuous or abortive exploration expenses in the respect of an area surrendered prior to commencement of commercial production. Drilling or exploration expenses in services in relation to physical assets used before or after commencement of production. Any kind of depletion of mineral oil in mining area in the previous year in which commercial production commenced or succeeding year if specified in the agreement. Basically, they are coming and saying if you have incurred some expenses which are abandoned, you can claim it as deduction. There is no restriction. Okay, again, like I told you, mineral oil and all is very, very specific level provisions, will not come for exam purposes. Give it a go through. Apart from that, ignore it off. It is not coming for exam. Clear? Yes. On the top there is this cooperative society. In simple words, they are coming and saying that whenever there is a reorganization happening, basically two cooperative society gets merged, one cooperative society sells it to another cooperative society, there is an amalgamation, demerger, whatever it is just a clarificatory provision to come and say the new cooperative bank will take all the deductions of the old cooperative bank. Like preliminary expenses and all, you have it for 5 years, right? Let's assume that preliminary expenses 2 years one cooperative bank used, next after that it got amalgamated, no problem, balance 3 years new cooperative bank will use. This is just a clarificatory provision, has nothing to do with exam. Clear? Yes. Technically none of these provisions are relevant from exam perspective. Just to give it a go through. Apart from that, ignore it off. Please don't read it from exam perspective. Yes. So I'm ignoring for you how many pages? 1, 2 and 3. 2.5 pages or 3 pages. You can ignore it off. You don't have to read it from exam perspective. Just give it a walkthrough. If you don't understand, let me know. From a practical perspective, I'll explain it to you. Beyond that, that's not important. Yes. Now, like I told you, in my book, an extra feature which I have also included is called as special adjustments. What is the special adjustments, Rahul? Basically, in the past, ICA has asked adjustments which are beyond your book. These things have never come in the study material. The provisions which we did right now, no, these are not part of the study material things, but ICA has asked it over and above the study material thing. So I am put it off as special adjustments for you. In case these get repeated in the exams, you will know from here itself. So this is basically a capture snapshot of your past exam questions. Okay, we are going to look at the adjustment. You are going to tell me what is the answer. We're going to look at the adjustment and you're going to tell me what the answer is. Yes. Adjustment number 1, it comes and says there is a person who has purchased raw materials in cash exceeding 10,000 from a day in Mandi. What do you mean by Mandi? Mandi is a market. So you went to a market. In the market, you went and you purchased raw materials in cash exceeding 10,000 in a single day. Allowed, not allowed? You will have to write an assumption. Assumption would be, assume that if it is taken from a farmer, then it is not disallowed. If it is taken from middlemen, then it is disallowed. Yes. So questions like this is what ICA tests you. Okay. They will not give you a straight cut answer. They will expect you to write assumptions. So be very clear. In exams, don't sit and rethink too much. Don't sit and think too much. You see an adjustment, you know the answer. If you know the answer, you write the answer. Otherwise, make an assumption and go forward. Don't sit and deliberate in the exam hall. You will not get much time around it. Clear? Next. It says machinery value is included in closing stock. So there was one adjustment which came in the P&L, which came and said there is a machinery value of 10,000. This machinery value of 10,000 was there in the closing stock. Now there was a huge problem. The question simply came and said the machinery is there in the closing stock. Nothing else. That's all. Okay. Now, if you understand accounts better is when you can do this properly. Understand this example carefully. The question is coming and saying that the person has a machinery spares. Now, first of all, is machinery spares an asset or a expense? Is it an asset or an expense? It is an asset. You should have capitalized it, but it is there in the closing stock. It is there in the closing stock. That's where the problem is. Yes. Now notice your P&L carefully. Notice your P&L carefully. You will prepare something called as a trading account. Yes or no? You will prepare something called as a trading account. So you prepared a trading account. You prepared a trading account. On the right side, we'll have buy sales. Yes or no? Then you will have buy closing stock. Left side, like 2 opening stock. Then 2 purchases. 2 gross profit. Yes. Now the question is coming and saying that this closing stock has a number which includes machinery spares. Your automatic assumption will be, Rahul, closing stock is inflated. Closing stock is inflated. So you'll come and say, Rahul, we need to reduce our profits with the machinery spares amount. Yes or no? Yes or no? Answer is no. Answer is no. Use your head properly. An item is there in the closing stock. Why will it be there in the closing stock? Because you purchased it. Yes or no? So if you purchased it, it would also be a part of your purchases. Yes or no? An item being there in the closing stock is only possible if you have also included it as a part of your purchases. You may come and say, no, Rahul, I have not purchased it in the current year. I would say no problem. Even if you have not purchased in current year, if you purchased it in older years, it would have been part of opening stock. So think about it carefully. An item being there in closing stock automatically means that it is either a part of purchases or it's a part of closing stock. Now you may think that your closing stock is inflated. I would come and say, Rahul, even your purchases and opening stock is inflated. Yes or no? So if you try to reduce your closing stock, you also need to increase your opening stock. Which technically means that there should be no adjustment in P&L. There should be no adjustment in P&L because an item there in closing stock would also be a part of your expense side. If the item is going to be a part of your expense side and income side, it means they both have balanced each other. Yes or no? They both have balanced each other. If they've already balanced each other, do you have to make an adjustment to P&L? No. You don't have to make an adjustment to P&L. Appu Rahul, what is the use of this adjustment? The use of this adjustment is just to come and say that the P&L has not changed. But because it is a machinery spare, you need to charge depreciation. So the only request in this question was to ignore P&L. And only charge depreciation. You will say, Rahul, but in the question they came and said it is there only in closing stock. No, can I make an assumption that it is not there in opening stock? Answer is not possible. How can you have something which is there in closing stock but not there in opening stock? Is it possible? Not possible. Not possible, which means unless and until you understand accounts properly, you will definitely make a mistake. So this is one very, very good question which came in exam, where they came and said something is there as a part of closing stock. You need to understand if it is a part of closing stock, it is also a part of opening stock or purchases, which means no adjustment to P&L, only charge depreciation. Yes, in case the question would have explicitly come and clarified that the amount is overvalued. In that case, you can make an assumption that yes, that's an arithmetical error. In that case, you will change closing stock also, you will change depreciation also. Okay. But unless and until it comes and says you that it's overvalued or it's an error, in that case, you will do it. Otherwise, you will never do it because your assumption is that it is a part of opening stock as well. Did you understand what I said? Yes, read the adjustment. I'm saying machinery spares included in closing stock. I'm saying if the machinery spares are included in closing stock, same must have also formed part of your opening stock or purchases. Hence, there is no requirement of adjustment in net profit since it is there in both debit and credit side. However, these should be charged off for depreciation. Yes or no? Careful. Yes. Next adjustment. Rahul, I have said that I have installed air conditioner or refrigerator in the director's premises. Now, this was a tricky area. Be careful. I am saying the question came and said net profit includes depreciation charged on the air conditioner which is installed in director's home. You are a company installing an AC in director's home. For that, depreciation is being claimed by the company. Question came like this. Now, most of the people on the first assumption basis would come and say, Rahul, this is disallowed because it is personal in nature. Yes or no? You will come and say, Rahul, depreciation on air conditioner will be disallowed because the AC is installed in director's house. and therefore it is personal in nature. I will ask you a simple question. What kind of entity is this? What kind of entity is this? This is a company. In a company, can you ever have personal expenses? Can you ever have personal expenses? Can a company ever book any personal expenses? No. Which means if an AC is being installed in director, it is purely because director is an employee of the company. You are trying to support the director, do better work. Yes or no? Yes or no? So in that case, can you tell this as a personal expense? Answer is no. Answer is no. In ICI came and made an assumption saying that since the director is an employee of the company and company is a separate legal entity, the AC which is installed is for doing more effective work by the director in the home also. For more effective work by the director in the home also. So which means this is an expense incurred fully for the purpose of business, and hence it is allowed as a deduction. And hence it is allowed as a deduction. This was not a personal expense. This was not a personal expense because the person involved is director. The person involved is director. Had this question been for a sole proprietor, if the question would have come and said AC is installed in sole proprietor's home but is depreciation fully claimed in office, then you would have disallowed because it is personal. There is no separate legal entity concept here. Yes or no? But when it comes to a director, do you know that the director is the owner of the company? No. Do you know that it is a personal expense? No. In which case the assumption would be it's a revenue expense. The assumption would be it is a revenue expense. Yes or no? Yes or no? Highlight the word very carefully. The word highlighted is director. The word highlighted is director. A director Puerto Rico, director is an employee of the company. Any benefit you do to the director is still office purpose. Is still office purpose and therefore is allowed as a deduction. Is allowed as a deduction. When you were doing inter, you would have learnt about perquisites. In perquisites, you would have said use of assets by employees. Use of assets by employees. You would have seen some questions in exam and all where they would have come and said motorcycle is given to the employee's son. Motorcycle is given to the employee's son. You would have charged perquisite on it, yes or no? Why would have you charged perquisite? Because employer is going to claim deduction. You may come and say, Rahul, it is given to the employee's brother, so it is personal expense. No, understand, employee has nothing to do with the company. Employee has nothing to do with the company. Company is different, employee is different. If I am giving a benefit to the employee, it does not make it personal. It does not make it personal. I am giving it to him so that he will work better tomorrow. So that he will work better tomorrow. So it is still called as office purpose. It is still called as office purpose. Careful about this adjustment. Yes or no? Yes or no? So what is the adjustment? It's saying any kind of air conditioner, refrigerator installed in the residence of director is assumed as done wholly and exclusively for the purpose of business. Hence depreciation is allowable to the company. Hence depreciation is allowable to the company. Clear? Can we go forward? Can we go forward? Yes. Item number 4. Office equipments. Item number 4. Office equipments. First time in life, income tax. ICI never used plant and machinery, never used furniture, never used building, never used computers, never used intangible assets. Weirdly gave a name called as office equipment. And they said, Rahul, someone has purchased office equipment, give depreciation. Give depreciation. The first thing which came to most of the people mind is they saw office, they saw equipment, they say furniture and fittings. They said furniture and fittings charged 10% depreciation rate. Understand, office equipments are 15% plant and machinery. Are 15% plant and machinery. What is covered in 10% is purely furniture. Office equipment is not furniture. Furniture means table, chair and all those things. Office equipments can be stapler, all those items. Yes, these items are not furniture, they are plant and machinery. So ICI came and said whenever there is something called as an office equipment, take it as plant and machinery and charge 15%. If you feel you can also charge 40% saying it is a computer or all those items. You can charge 40% saying it is computer or it is temporary nature but never charge furniture. Never charge furniture. So you are free to assume 15, you are free to assume 40, but you are not free to assume 10. You are not free to assume 10. Yes, yes. Notice, no, these are never there in the study material. I am giving it to you extra for you to answer your questions properly. Can we go forward? Next, it's saying provision for gratuity based on actuarial valuation. Okay. Now, question in exam came and said net profit includes 100 crores created as a provision for gratuity based on actuarial valuation. Based on actuarial valuation. People saw actuarial valuation meaning something big has been done, analysis has been done, therefore they said allowed. I told you whenever there is a provision for gratuity, it has to be disallowed. The only thing which can be allowed is the actual gratuity payment or any kind of payment to gratuity fund. Any kind of payment to gratuity fund. Even if you do an actual valuation, you call a CA, you call a big shot person and do actual valuations, it doesn't matter. It is still a provision. It is still a provision. So the answer was not allowable as deduction under section 40A7. However, the actual gratuity paid during the year can be claimed as deduction, and hence only the difference needs to be added back. Hence only the difference needs to be added back. Is that clear? Can we go forward? Can we go forward? Next item. The question had come and said GST refunded to the company by the government. What item? GST refunded to the company by the government. The question came and said net profit includes 10 lakh of GST which is refunded by the government to the company. It's refunded by the government to the company. Why would government give you back GST, ma? Why would government give you back GST? Think and tell me. Think and tell me, why would a government give you back anything? Government will give you back because it is a government grants or a subsidy, yes or no? So any kind of GST which is given by the government is because government is giving you a subsidy. Now, like I told you, subsidy is taxable, not taxable? Taxable. So any kind of GST which is refunded by the government to the company is taxable. But in case the question comes and says that the money which the company got, out of that money, 10 lakhs he paid it back to his vendors. 10 lakhs he paid it back to his vendors. So company came and said, I also do not want the money. Let me give it back to you. Let me give it back to you. Then in that case, you can claim it as deduction. You can claim it as deduction because you did not get the whole money right now. You only got the part money. Part money you gave it back to your vendors. You gave it back to your vendors. So any GST refunded by the government is nothing but a subsidy. Is nothing but a subsidy. But if you decide to give it back to your vendors, then in that case, you can reduce that number also. You can reduce that number also. Yes, yes. Next, a very weird kind of name started coming in the exam hall. And this came almost about 5 attempts. The heading said industrial power tariff concession received from government. Industrial power tariff concession received by government. Amount is 1 lakh. You had no idea what to do. What do you think is the answer? You saw your question. Question says net profit includes industrial power tariff concession given by government. What will you do? Very good. Very good. Understand. Don't put your head into it so much. Where did the money come from? Government. Why would government give you money? Because it is subsidy. So call it as subsidy and tax it off. Don't get into what is industrial, what is tariff, what is concession, doesn't matter to you. Money has come from government. Will be called a subsidy. Taxable, not taxable? Taxable. That's all is the answer. Straightforward, cut answer. Clear? Yes. This is what I want to do in exam. Look at an adjustment, take 30 seconds. If you get the answer, you write the answer. If you don't get the answer, write any answer. 99% of the cases, assumption nala, it will be correct only. I say I would have given you both the assumptions. Ipdiyo panla, abdiyo panla, which means whatever you have done is right only. Don't sit in exam hall and think too much. Okay, you don't have the time for it. Adanala I am putting out this to you. So that in case these items comes, now you know. But understand, no matter how hard I try, I do not set the paper. Even if I give you 50 adjustments, I say I will always find the 51st adjustment to give you. So it is not possible that whatever I have given you will come in exam. It may come, it may not come. For the items which still do not come, you have to use your head. Write anything, it's okay. If you know, you write. If you don't know, still write. Don't let it go. Write any assumption. At best, what will happen? That assumption will carry you 1 mark less. Okay, but you have still not wasted your time and you still have tried to do other things. You will still be in a better position. So please continue doing that. Clear? Going forward, it's full mark, compulsory question. This will come in compulsory only. Pgbp will never be tested as an individual question. It will be a part of compulsory question. Your compulsory question will come and say 14 marks. This is the question. In the adjustments, you have to find the answer. You will never get a Pgbp question separately. Okay, it will be a part of compulsory question only. Yeah. Next one. Profit from hedging contract entered for meeting out losses in foreign currency, risk of imported plant and machinery. I am saying there is any kind of profit you have got from hedging a contract which is entered into for meeting out losses in the case of foreign currency risk of imported plant and machinery. Imported plant and machinery. Look at the words very carefully. I notice a hedging contract. I notice a hedging contract. First thing which will hit your head is, Rahul, this is speculative. This is speculative. Next, immediately you'll notice the word is called as profit. The word is called as profit. Now, notice carefully. I told you whenever we did speculative transaction, I told you for me, the only thing which I am bothered about is speculative loss. I am not bothered about speculative income. So, profit portavarikum, do I have to bother? No. Now, if you notice, I have two words. It says profit from hedging contracts. Now, why is the hedging contract taken? It says it is taken for meeting out losses of foreign currency risk of imported plant and machinery. The moment I saw this word imported plant and machinery, something should have hit my head, which is 43A. 43A, which comes and says the moment you take any kind of foreign currency loss on an imported plant and machinery, you will adjust it to the asset. You will adjust it to the asset. Yes or no? Yes. So, instead of you reading so many English, the moment you saw three words, you now know what is happening. You now know what is happening. One is there is a foreign currency. Second is there is a profit. Third is it is a imported plant and machinery. Immediately what you'll do, 43A. 43A comes and says adjust it to the machinery. Adjust it to the machinery. Now, if you have got a profit, machinery value should fall or machinery value should increase? If you have got a profit, machinery value should fall or machinery value should increase? I'll ask you a simple question. Okay. Today you bought the machinery for 8 lakh rupees. Today you bought the machinery for 8 lakh rupees. Tomorrow when you went to make the payment, he said, no, sir, I want only 7 lakh 50 because foreign currency has fallen. Foreign currency has fallen. Did you make a profit or did you make a loss? I made a profit. If I made a profit, when I made the profit, I paid him how much? 7 lakh 50, which means machinery value fell or machinery value increased? In simple words, Rahul, if it is a loss, the machinery value will fall. If it is a profit, machinery value will fall. If it is a loss, machinery value will increase. Yes, don't mug it up. Don't mug it up. Use your head. Use your head. Answer yourself. 8 lakh to 8 lakh 50, machinery value increase. Therefore, there is a loss. 8 lakh to 7 lakh 50, machinery value fell. Therefore, there is a profit. So you have to reduce it. You have to reduce it. Don't read too much English. The main English here was foreign currency, imported plant and machinery. The main English was foreign currency, imported plant and machinery. Automatically, section applicable is 43A. Section applicable is 43A. Clear? Clear? Can we go forward? Can we go forward? Yes. Question plainly states that depreciation is computed as per section 32 income tax or income tax rules. Now, this is one area which ICAI loves to play with you. What will happen now? ICAI will come and say, under net profit is included computers which are charged off to P&L. Computers which are charged off to P&L. Hey, can you charge off computer to P&L? No. So what you will do? You will first say capitalize, and you will ask to charge depreciation. You will ask to charge depreciation. Immediately in the next line they will come and say depreciation as per section 32 is 5,40,000. Depreciation as per section 32 is 5,30,000. Now the question which then came to your head is, Rahul, the depreciation which the ICAI has given you, does it include the computer or the depreciation, or does it not include computer depreciation? Yes or no? Yes. And the problem is in the question they will not clarify that. You have to put your assumption. Ask yourself a simple question. If the ICAI is coming and saying depreciation is as per section 32, it means it is the final depreciation. Yes or no? Which means, does it already include computer? Does not include computer? It already includes computer. If it is already including computer, Rahul, should you charge additional depreciation? No. Don't charge extra depreciation. Make an assumption that since the heading says it is depreciation as per section 32, it means the computer or the depreciation is already considered, which means you don't need to charge extra depreciation, which means the only thing which you will do is computer alone you will disallow. From the P&L and you will ignore it for depreciation. So in exam, read the depreciation carefully. If it says depreciation as per section 32, it means that the depreciation is already considering any other capital items which are there on the top. Sometimes question will say depreciation as per section 32 within bracket ignoring any adjustment given above. Ignoring any adjustment given above. That means computer is not considered. In that case, you need to charge extra depreciation on computer. You need to charge extra depreciation on computer. See, understand, PGBP is not tough. PGBP is not tough. ICI loves to make it tough. They will put extraordinary English. They'll put extraordinary English and keep complicated things for you. Okay. Practical world and all, you will not have this confusion only. Anna, theoretical world, ICI loves to test your accounts. So they will keep playing around with you. Okay. So read English carefully. Read English carefully. If the question simply comes and says depreciation is as per 32, you will assume every adjustment is taken care of. If the question says depreciation is as per 32, ignoring any adjustment above, then in that case you will give depreciation as per the section 32, plus you will also consider any depreciation on other capital assets. You will also consider depreciation as per other capital assets. Depending on your English, answer will change. Depending on your English, answer will change. Clear, not clear? Clear? Can we go forward? Yes. Next item. One-time license fee paid for obtaining franchise debited to P&L. One-time license fee debited to P&L. The question came and said net profit includes a one-time license fee which is debited to P&L for buying a license. Question to you. Buying a license is a capital expenditure or a revenue expenditure? When you are planning to buy a license, is it capital or revenue? It is capital. When should it be there in P&L? Not there in the P&L. Not there in the P&L. Have you put it in P&L? Not put it in P&L. You have put it in P&L. What will you do? You will. Very good. You will disallow and then claim depreciation. Now depreciation claim under the which asset is it? It's a license. So which means what asset is it? It's an intangible asset, which means depreciation rate will be 25. That's what the answer is. That's what the answer is. It says it is qualified as an intangible asset, hence added back to the net profit while computing PGBP. However, depreciation at 25% can be claimed on the assets. Can be claimed on the assets. Yes or no? Yes or no? Next item. Next item. This was an interesting thing. This was an interesting thing. Read it. No, it says bonus payable to employees under dispute. Bonus payable to employees under dispute. To avoid the late payment of bonus, the company created a trust and transferred the money to the trust before the due date of return filing. However, the final remittance to the employee was made after the due date. So the question came and said that the company has to pay some bonus, but there is a dispute between me and the employees. In order to save myself, what I did is I created a trust and I moved the money to the trust. I moved the money to the trust. I paid the money to the employees only 3 years later. Only 3 years later. Company is asking that he wants to claim this as a deduction because he's paid it to the trust. Because he's paid it to the trust. Now you are the advocate. Are you going to allow this? Not allow this? Are you going to allow this? Not allow this? Quickly. Allow, not allow? Bye. Avoid payment. No. They're going to give that bonus to the trust. They're going to give the bonus to the employees. Just that today they cannot do it because it's under dispute. So they parked it in a trust and they told after the dispute is over, I'll move it from the trust and give it to you. Why will you not allow right now? That's what my question is. My question is when you have already paid it from your account and it has already gone to a trust, what is the problem in allowing it right now? Latanya? Are you there, ma'am? I can't hear you properly. I think. Give me 1 second. Let me check. Now try. Yeah, audible.
Because even in gratuity case also, we were allowing it, so can we consider this like a fund kind of thing?
That's what my question was. You have transferred it to a trust, so technically you have transferred it to a fund. So in that case, can you allow it as a deduction? Is the question then? Yeah, I would say no, Ratanya. I would say no. There are two reasons. Understand the gratuity Puerto Rico. Gratuity is being created as a trust. See, understand the reason why you create a fund. The reason why you create a fund is not because you have a dispute and you want to pay. The reason why you create a fund is because those payments are long-term payments. What payments? Long-term payments. Notice it carefully. We discussed about superannuation fund, provident fund, gratuity fund. All these funds, payments will happen to you next year itself, or it will happen to you after some time. It will happen to you after some time. So therefore, creating funds there makes sense. Makes sense. And now coming to bonus, do you think you can create a fund for a bonus? No. Do you think you can go to income tax authority and get this fund approved? No. Which means these funds are just a dummy entity where you are keeping some money only for safekeeping. Only for safekeeping. Does it change the fact that the bonus is paid to employees? No. Second and the most important thing in this is your dispute. Now understand, the reason why you're making this money to the trust is because it is under dispute. Now if you are moving this money to the trust, are you moving the money which the employee is expecting, or are you moving the employee which you are expecting? Obviously you're moving the money which the employee is expecting, because if employee is coming and saying, say, understand there is a dispute. Now what would be the dispute? Do you think employer will come and say, I want to pay 1 lakh, and employee says, no, give me 50,000? No, obviously it will be the other way around. Employer will come and say, I will pay you 50,000, but employee saying he wants 1 lakh. Yes or no? In this scenario, the amount which will be moving to the trust will be 50,000 or 1 lakh. It will be the whole 1 lakh. It will be the whole 1 lakh because it is a dispute payment. It's a dispute payment. If you want to go and approach a court, court will come and say, first of all, deposit the highest of the money. Then I will make a decision on what is right. Now imagine, if you today come and move 1 lakh rupees to the fund, and you come and say, dear fund, I have moved 1 lakh to you, therefore I want a deduction. Tomorrow if the court rules it in your favor and says the payment should only be 50,000, do you think you will pay the employee 1 lakh or 50,000? Do you think you will pay the employee 1 lakh or 50,000? You will obviously pay only 50,000. But if I tell you that you can claim the deduction as a fund payment, you will claim full 1 lakh, which means you ended up claiming extra 50,000. Is that right? Not right? It is not right. Understand, you cannot claim deductions basis disputes, because disputes need a finality. And therefore the allowance will only happen in case the payment has happened to the ultimate employee. This is a court decision. In Shastrun Chemicals and Drugs Limited versus CIT, it was said that transferring of fund to a trust is not equivalent to paying employees. Hence, it will be disallowed under section 43B. It can be claimed in the year of actual payment to employees. Now, you will notice I have put a case law around this. The fun part I'll tell you is that this case law was never there in the study material itself. It was never there in the study material itself. And I told you in the past also that if a question of a case law is not there in the study material, it should not be tested. Yes or no? Yes. But that year there was some funny examiner. Who wanted to play with your life. And therefore gave these kind of questions. In the suggested answers where they came and clarified this is the case law. We all went and we debated. We saw you should not give any case law which is beyond the syllabus of the material. Because you are technically testing people for things which they don't even know. This is purely out of syllabus. ICI came and said, yes, I know it is out of syllabus. I never expected you to know the case law. I only wanted you to understand the logic. While this case law may have a different answer. What I wanted to see is whether a student of ICI can become a judge in the future or not. And can make a right decision or not. So even though I gave you a case law decision, it is still valid. The point I am trying to make is you will see out of syllabus questions. You will see case laws which are not even there as a part of syllabus also. Okay. Don't worry so much about it. Use your head, you will get an answer. Ask yourself simple questions. Rahul, disputed payment now. Do you think the payment which you have paid is final or not final? Not final. Do you think you want to claim a payment which is not final? No. So therefore you claim the payment when it is actually made. Clear, not clear? Clear. This is what the case law is. Yes, ma'am.
Even in that 43B when they say gratuity paid to this fund?
Yeah.
It is actually when the company transfers it to the fund, they get the deduction.
Exactly.
Ultimately, from the fund, when it will be paid to the employees, that is.
It doesn't matter, because see, understand, the fund which you're talking about is an approved fund. Okay, the moment you make a payment to an approved fund, it means the money is gone from out of your business itself. Okay, approved funds are like LIC and all those things. Okay, now the moment you have given money to LIC, do you think employer can go back to LIC and get back the money? No. So that means it doesn't matter for you. Tomorrow, what will happen when the employee retires? The LIC will go and pay to the employee. You don't have to worry about it so much. Okay, so that in that case, you have zero control over the money itself, which means the money is gone out of your account. You don't have to worry about it so much. On a bonus பொறுத்த வரைக்கும், money is still in your account because it is still under dispute. It is still under dispute. While you have made the payment to trusted, tomorrow if you win the case, you will get back the money. You will get back the money. So therefore, it is still allowed. Therefore, it is still it is not allowed and will be allowed in the year of actual payment.
So the gratuity transfer to the fund, it will still be considered like a payable in that. It will be like a liability.
It will be of actual payment, no, Britania. That's what I'm telling you. See, when you are going to make a payment to a gratuity trust, it means you have made a payment to an external party because it is approved. Okay, so which means you have nothing to do with the payment anymore. The moment you made the gratuity, money has gone out of your account and it is permanently gone from your account. Okay, so you can never get it back in future. Is that clear? Yeah, can we go forward? Going forward. Expenditure incurred on project abandoned subsequently while without creating an asset. What has happened? Expenditure incurred on project abandoned subsequently without creating an asset. If you recall, we already did this when we did PVR, pre-village roadshows. I told you that you have done some feasibility report. You tried to create a project got abandoned. Project got abandoned and therefore you are allowed as a deduction. Yes or no? Now the comedy, what happened is, this is a case law which is notified in study material. This is a case law which is notified in study material where they came and said expenditure which is incurred on a feasibility report, if the project is abandoned, will be allowed as a reduction in revenue nature. In revenue nature, ICI gave a twist in the exam. They came and said, boss, the company is just now getting incorporated. The company is just now getting incorporated. So the question came and said, the person has done a feasibility report. The company is yet to get incorporated. So because of incorporation, the company is doing a feasibility report. Project is abandoned, but the company is now incorporated. Company is now incorporated. In that case, what to do? Now, everyone in the market only knew about Priya Village roadshows. They said revenue expenditure, claimed it off. They did not use their head. Understand, is your company there? Not there. Is your company there? Not there. The company is not there. If the company is not there, which means whatever expenses you incur before even the company started will be called as capital expense or a revenue expense? Capital expense, yes or no? So they might have noticed the feasibility project part. They might have noticed that the project is abandoned, but they forgot to notice the fact that the business is new. The moment the business is new, asset automatically becomes capital. Everyone quoted Priya Village roadshows and claimed it as deduction. ICI came and said, no revenue for you. This is a capital expense, and they deleted everything off. But yes, this was very wrong of ICI because this also was a case law which was not notified. Study material, the suggestion answers came with this. They said if it is an existing business, it will be allowed as a deduction as revenue expense because of the Priya Village roadshows. However, if it is a new business, it should be treated as a capital expense and should be disallowed while computing business income. Further, no depreciation will be allowed because the project is abandoned and the asset is not come into existence. They mentioned it as a new business and they came and said it is project abandoned. ICI in suggestion answers came and said this should be capitalized and no asset will be created because the asset is not come into existence. The case law was McGraw Ravindra Laboratories India Limited versus CIT. This case law has never been notified by ICI ever. The contradictory case law is Priya Village roadshows, that is there in the study material also. Okay, but they will suddenly come and say what I have given in the case study material is also ignored. I am giving you a fresh case law. You should have known about the case law. Yes, things like this happen in exam. My point is, when you read an adjustment, use your head. Open your head and read the adjustment. Sometimes your accounts can play a game. Income tax is more or less your accounts. is more or less your accounts. If you understand your accounts properly, income tax will automatically kick in. Income tax will automatically kick in. Yes or no? Yes or no? Can we go forward? Can we go forward? Next. Expenses incurred for public issue of shares. Issue could not materialize due to non-clearance by SBI. SEBI. Due to non-clearance by SEBI. No. When we did section 37, if you recall, I said you have any kind of expenses incurred for debentures, for bonus shares and all those things where there is no increase of capital base, it will be allowed as a revenue expense. But if it is done for an IPO, FPO or rights shares, it is done for a capital nature and therefore it is disallowed. Now the problem which came in the question is ICA came and said, yes, this is for an IPO. But unfortunately IPO could not materialize. Because SEBI did not give approval. They expected students to come and say, yes, if IPO would have been final, then it is disallowed. But they put a twist and they came and said, no, IPO did not finalize. Now tell me whether it is allowed or disallowed. Understand, it doesn't matter what the final outcome is. Did you incur the expense for incurring capital base? Yes. Even if it did not happen, it doesn't matter. It is still capital. Don't change answers because of that. So the answer was disallowed as incurred for the purpose of extension of capital base and hence would be treated as capital expenditure even though it did not go through. Okay. Just because I came and told you IPO meaning it should be capital does not mean that if IPO did not materialize, it becomes revenue. Answer does not change. It is still capital. Yes. See, the kind of trick and all which ICA plays on you. Fun only it is. Next. Yeah, you have to. See, at the end of the day, the point is very simple. Like I told you, you can never predict what will come in exam. Okay. So, it's a matter of chance. Whether you get the right answer or not is purely based on your analysis and purely based on luck. Okay. But the point what I'm trying to make when I give the special adjustments is that every one of these adjustments hardly carry 1 mark. You either write a correct answer, you get 1 mark. You write a wrong answer, you lose 1 mark. But at the best, you'll only lose 1 mark. It's a 14-mark question. Okay. The idea is very simple. These kind of adjustments should not become a reason for your failure. Okay. Because understand, even if you don't know the answer to this, you will hardly lose 1 mark, but you still have 13 marks to conquer. If you sit on one of these adjustments in exam and you deliberate about it too much, you think about what should be the answer, how should be the answer, whether it can be this, whether it can be that, you're automatically wasting time. Okay, you're wasting time for getting 1 mark. That time which you wasted could have helped you score marks in another place which you already know the answer about. Yes or no? So the idea is very simple. I do not want you to waste time on something which you don't know. If you don't know, again, don't leave it also because it is a part of a compulsory question. Total income should come. Make your chance, people. Either put it as allowed or put it as not allowed. It doesn't matter. At best, you lose 1 mark. Okay, but your answer will still be concrete enough because the ICI will come and evaluate you based on the balance 13 marks. On the contrary, you sit in the exam hall, you come and say, no, Rahul, I did not know the answer. I did not know how to do it. I spent 30 minutes just to understand what to do about this adjustment. You did not teach me properly. Study material is wrong. We are getting out of syllabus questions. ICI is tough. Paper is tough. Life is tough. It doesn't matter. You can curse people. But that will not get you any marks. In fact, you lost marks in another place where you could have scored better. So the idea is very simple. You look at an adjustment, you tell me, Rahul, yes or no. Yes, no. Correct in the pappon, correct illa nalo pappon, it doesn't matter. Work on the balance 99 marks rather than focusing on this 1 extra mark. Clear? That is what the idea is. Yes, that is why I'm doing this. I'm just trying to test your knowledge. Look at the next one. It says loss from trading in derivatives. Now ICI in one of the exam paper came and said net profit includes 10 lakhs, which is a loss in trading in derivatives. Loss of trading in derivatives. Everyone is now confused. What to do? Think about it. When we did speculative transaction, I came and told you derivatives is non-speculative, which means it is a normal business. Which means you had to do nothing. You had to simply come and say this is a non-speculative transaction. If you have done a loss from trading in derivatives, it is allowed as a deduction. Option number 2, you could have come and said, boss, the person is in the business of so and so. Let's say business of furniture. He's in the business of furniture. You can come and say derivatives is a separate business. Derivative is a separate business. So what you'll do, you will first disallow this derivative business. You will first disallow this derivative business, and then after you find the Pgbp from furniture business, you will claim it as a reduction, because losses from one business can be set off against another business. Yes or no? So 2 options for you. Option number 1, you come and say Rahul, loss from trading in derivatives allowed as a reduction. Option number 2, you come and say I will disallow because it is not furniture business, and then I will separately allow it as a reduction from an business because it is intra-head. Because it is intra-head. At the end of the day, what happened? It was allowed as a reduction. It was allowed as a reduction. Nee eppadi pachi paathalo, answer is the same only. Answer is the same only. So in this, what they came and said is added back to the net profits while computing Pgbp if the company is not in the business of trading of derivatives. However, the same can be separately claimed as a reduction under section 70 of Pgbp as they are not speculative in nature. In simple words, Rahul, allowed. In simple words, you allowed. You directly allow in Pgbp or you remove it and separately allow. Also, it doesn't matter. It is allowed. It is allowed. Clear? Can we go forward? Can we go forward? Next. Expenses incurred for which invoice is not available but indirect evidence can be provided. Indirect evidence can be provided. What happened is, one of the exam papers they said there is a person called A. There is a person called A. He has done some expenses. He has done some expenses. Assessing officer asked him for the invoices. He asked him for the invoices. This person came and said, no, sir, I don't have invoices. I don't have invoices, but I have some other evidences. I have some other evidences, like I have the goods inward report, I have the online payment and all. I can show you the proof that I made the payment. I can show you the proof that the goods came to my office. I just don't have the invoice right now because it got lost in fire. It got lost in fire. ICA is coming and saying, can you claim this as reduction, not claim it as reduction? Can you claim it as reduction or not claim it as reduction? Understand, invoice may be a valid document, but it is not the definitive basis. It is not the definitive basis. Just because you don't have an invoice doesn't mean everything gets disallowed. Doesn't mean everything gets disallowed. Are you able to prove that you bought it? Yes, because you have a goods inward report. Are you able to prove that you paid the money? Yes, because you have an online payment. Sufficient proof irka? Yes, which means the transaction is genuine, non-genuine. Is the transaction genuine, non-genuine? The transaction is genuine, which means allowed, not allowed. Allowed. That's all. Okay, nothing had to be done. We just had to put a note. You just had to put a note. Adakaga or periya kade. Use your head properly. Yes. Final adjustment. Final adjustment. It says expense for ISO certification. Expense for ISO certification. Hey, do you know what is ISO certification? Any idea? Any idea what is an ISO certification? Any idea? No idea. Okay. Now assume Rahul has not taught you this. Assume Rahul has not taught you this. You are in the exam. You are in the exam. You see 3 lakh rupees paid for ISO certification. What will you do? I told you, you have only 10 seconds. Make a decision. You will? Anything? That's all. Answer is over. You will treat it as revenue and answer is over. That's all my answer. Okay. Rahul, I don't even know what is ISO. Does it matter? Doesn't matter. Treat it as revenue and close the answer. If I have to clarify to you what is ISO, you might have noticed some schools, some organizations and all, they will say ISO 2001, 8000 certified and all. ISO is basically an Indian standards organization. ISO is basically Indian standards organization. This organization basically gives you a standard. Okay, if you go and get a certification from there saying that, sir, my business or my work is up to the standards, and if they give you a certificate, tomorrow you can go to the market and you can show the certificate saying, sir, I've got a certificate from ISO which proves that I am doing a very good job. Every business which I do or every process which I have is as per proper standards. I maintain hygiene, I maintain models, I maintain structure. Everything happens in a proper sequence, sir. If you do business with me tomorrow, I will ensure that nothing goes wrong for you. Okay, this is more like an audit certificate. When you get an auditor certificate, you get it for what? You get it to prove that your accounts are proper. When you get an ISO certificate, you get it to prove that your standards are proper. Now, question to you, you have gone to that ISO people, called them to your office, showed them your office, told them that, sir, I am doing everything properly. For this, they have given you a chapa. The chapa says ISO certified. Tomorrow you take this chapa, go to the market and come and say, I am ISO certified, which means I am a good person. Are you creating an asset, not creating an asset? Are you creating an asset? Not creating an asset. You are not creating any asset. You are just using a certification. You're just using a certification. Does it add value to your asset? No. Should you capitalize? No. It is already there in P&L. What should you do? Leave it there. Leave it there. Yes or no? Yes. Rahul, I don't even know the words which they are using. Revenue and close it off. Revenue and close it off. Unless and until somewhere they come and say it is included or a part of machine, part of plant, part of building, you will capitalize. You don't understand the word expenses allowed as a reduction because you are doing business. You're doing business. Words are not important for you to know. Business can make any kind of expenses. Business can make any kind of expenses. The only thing which you need to check is it is in the nature of personal nature or is it in the nature of donation nature. If not, it is revenue always. It is revenue always. Yes, like I told you, Pgbp is simple. As long as you act like a fool, as long as you act like a fool, don't think too much. You think too much, this is what will happen. Okay, don't know the answer, revenue expenditure, close the answer and clear. Can we do sums now? Yes, I have given you a basic idea of special adjustments also. Keeping this in mind, now we'll do sums. Ritanya, all clear? Can we do sums? Okay, let's see the question. Now, this is the cooperative bank code of provision. I did not teach it to you. I did not teach it to you. Without even reading the provision, we are now going to answer this question. Okay, use your head and logically answer me this question. The question says, Alpha Cooperative Bank amalgamated with Beta Cooperative Bank on 1st December 2023. Two banks, both banks have got amalgamated. The depreciation for the year calculated as per section income tax rules, allowable to Alpha Company Limited had the amalgamation not taken place is 2,40,000. So they're saying if the amalgamation had not happened, for the full year depreciation was 2,40,000. But has the amalgamation happened? Not happened. Happened. You are required to compute the reduction of depreciation allowable in the hands of Alpha Limited and Beta Limited. Alpha Limited and Beta Limited. Now, if you remember, when we did depreciation, I told you in case there is any amalgamation happening, we will compute depreciation for the whole year. Then, basis the number of days the person used, you will allocate. So that is what you're going to do. From April to November, you will give it to Alpha. From December to March, you will give it to Beta. Now you have a choice. You can either do it on a number of days model or you can do it from number of months model. Since it is on 1st December, I would like to do it on number of months. So which means how many months? April, May, June, July, August, September, October, November. 8 months is there for Alpha. 4 months is there for Beta. Take 2,40,000 into 8 by 12 will go to Alpha, into 4 by 12 will go to Beta. Do you have to read provisions for this? Not required. Answer the question and close the answer. They have done it on number of days format. Your choice. Numbers will not change so much. You do 8 by 12 also, number will moti match. Okay, there will be some 1 or 2 rupees difference. It doesn't significantly change so much. Okay, try no. 2,40,000 into 8 by 12 number is 2,40,000 into 8 by 12 number is adhe number irka. Say. Okay, so no matter what you try, the answer is still the same. Clear? Yes, some things are not meant reading. Some things are meant answering directly. Answer it off. Next. You are required to examine critically the following cases in the context of the provisions of Income Tax Act relevant for the assessment year 24-25. The answer should be supported with relevant case laws and workings. Okay. Now these are not the significant case laws. So they have put a case law, but we will discuss it logically. Yes. Let's read the question together. It says, Mr. Janak is proprietor of Yash Texnit, which is engaged in the garment manufacturing business. It should be question number 22, ma. Yeah, so Mr. Janak is a proprietor of Yash Texnit, which is engaged in the generation of garment manufacturing business. Now, one thing to keep in mind, this is a manufacturing business. What is this? It is a manufacturing business. The moment you see manufacturing business, what should come to your head? Additional depreciation. Keep it in mind. Next, the entire block of plant and machinery chargeable to depreciation at 15% has 20 different machinery items as on 31st March. So I have 20 machineries. One of the machineries used for the packaging has become obsolete and was discarded by Janak in July 2023. So one of the machineries is not usable, therefore he discarded it. Now question to you, just because you discarded it, can you remove the cost from the block? Can you remove the cost from the block? Can you remove the cost from the block? No, because what can be removed from the block is only sale value. Do you have a sale value? No. Can you remove it from the block? No. Assessee filed a return for assessment day 24-25, claiming total depreciation of 40 lakhs, which includes 4 lakhs being the depreciation claimed on the machinery item, which is discarded by Janak. The AO disallowed the claim of depreciation during the course of scrutiny assessment. Comment whether assessing officer has done right. Comment whether assessing officer has done right. Assessing officer is coming and saying on the machinery you cannot claim depreciation because the asset is discarded. You are saying that, sir, asset is discarded, doesn't matter. I have got 0 rupees money against it. I have got 0 rupees money against it, which means sale value is 0. And this is a part of a block, which means I cannot split my assets. I cannot split my assets, which means I am eligible for depreciation, sir. Who is right? Who is right? Who is right? Is the assessee right or assessing officer right? 10 seconds. Assessee, assessing officer. Understand now who's following the law? Is assessing officer following the law? Can assessing officer really look at one asset and remove depreciation of it when it is a WDV model? Can assessing officer do that? No. He cannot follow that model because WDV model Puerto Rico, the format is very clear. It should be opening plus additions minus sale value. Do you have a sale value? No. Which means you can claim depreciation. You can claim depreciation. No one can come and dispute about it saying one asset is costing 40 lakhs. First of all, assessing officer knowing that the asset is costing 40 lakhs itself is wrong. Assessing officer itself knowing 40 lakhs is wrong because 40 lakhs can never be the value of the asset because it is gone as a part of the block. The moment it goes into the block, can you have a depreciation? Can you have a WDV of that number? No, you can only have WDV of the whole block. You can only have WDV of the whole block. So discuss the actions of the validity taken by assessing. It says the issue on the consideration is whether disallowance of depreciation made by the assessing officer with regard to discarded assets in arriving at the written down value is justified. One of the conditions of the claim of depreciation is that eligible asset must be put to use for the purpose of business. The other aspect to be considered is whether merely discarding an obsolete machinery which is physically available will attract the expression money is payable under 43(6) so as to deduct its value from written down value. The facts in the present case are similar to Yamaha Motors, wherein the Delhi High Court observed that the expression used for the purpose of business when used with respect to discarded machinery would mean the use in the business not only in the relevant years but also in the earlier years. There is no criteria that you should use it in the current year. It is enough that if you have used it in the previous years. The discarded machinery may not be actually used in the relevant previous year, but the depreciation can be claimed as long as it is used for the purpose of business in the earlier years, provided the block continues to exist. Therefore, the conditions of claiming depreciation in respect of the discarded machinery would be satisfied if it was used in the earlier previous years. For the purpose of section 43 subsection 6, monies payable means the sale price in case of the sale or insurance or salvage or compensation monies payable in respect of the asset. In this case, the machinery has been sold as a machinery or scrap has been disposed of and it continues to exist. There is no monies payable in the case, which alone is deductible while computing the WDV of the block. Applying the rationale of the above case, the assessing officer in disallowing 4 lakhs being the depreciation claimable on the grounds that the same was not put to use is invalid. Since the said machinery was put to use in the earlier previous years. Hey, did you have to know the case law? No. This is a pure format. Opening plus additions minus sale value. Do you have a sale value? No. Can you remove something? No. That is what the answer is. Clear. Can we go forward? Yes. Scenario number 2. Scenario number 2, it says X Limited issued debentures in the previous year 23-24 which were to be matured at the end of the 5 years. The debenture holder was given an option of an one-time upfront payment of 60 per debenture on account of interest, which was to be immediately paid by the company. So since you took a debenture, the company gave him an option to buy a one-time upfront fee of 60 per debenture. As per the option exercised by the debenture holders, the company paid interest upfront to them in the first year itself, and the same was claimed as deduction in the return of income. So what happened is, I got an option. The debentures was worth 5 years. I today got an option that today itself I can make the full payment of the interest to you for the next 5 years. How much will I make? I will make 60 per debenture. I'll pay 60 per debenture. As per the option exercised by the debenture holder, the company paid interest upfront to them in the first year itself, and the same was claimed as deduction in the return of the company. But in the accounts, the interest expenditure was showed as return of debenture and return of over 5 years. So what happened is, in the accounts, the company amortized it over 5 years. Ana income tax return file panamodu, they said I want the full 60 today itself. During the course of assessment, the assessing officer decided to spread the upfront interest over the period of 5 years of the debenture and only allowed 1/5 of the payment, same as accounts. You are required to examine the correctness of assessing officer. Question is coming and asking that, Rahul, in accounts you decided to spread it over 5 years. In income tax also, should you follow the same logic, or are you permitted to claim the whole in the first year itself? What do you think is the right answer? Why, ma?
When expenditure has fixed, like we can estimate a fixed tenure for the expenditure.
Okay.
We have to write it off over.
We discussed it in zero coupon bonds, is it? Correct. Yes, technically I would say assessing officer is right. But what happened is, there is a case law which came out, and the case law came and said it is not required for you to write it off over 5 years. It is enough if you claim it in the first year itself. The logic is very flawed, but the judge made that decision, and so we have to follow the decision. Yes, let's read what the reasons are. It says the issue under consideration is whether a debenture which is issued at maturity at the end of 5 years, and the debenture holders are given an option of upfront payment of interest in the first year itself, can the upfront fees be claimed as a deduction, and would the treatment of such item as deferred revenue expenditure will have an impact on tax treatment? The facts of the case are similar of Taparia Tools Limited versus JCIT, wherein the issue came up before the Supreme Court. In this case, it was observed that 3613 says interest paid in respect of borrowed capital for the purpose of business or profession is allowed as a deduction. Now notice the word, it is interest paid. Which means the moment you make the payment, it is fully allowed. That is what Supreme Court came and said. The moment the option for upfront payment was exercised by the subscriber, the liability of X Limited to make the payment had arisen. Not only had the liability arisen in the previous year in the question, it was even quantified and discharged as well in the same previous year. As per the rationale of Supreme Court ruling in Taparia Tools Limited, when the deduction of the entire upfront fees payment is requested for you, it can be allowed as a deduction under the Income Tax Act. The fact that a different treatment was given in the books of accounts cannot be a factor which would bar the company from claiming the deduction under income tax. So just because you do something in accounts does not mean that you have to follow it in income tax. Income tax can follow a different treatment also. Accordingly, the action of the assessing officer spreading the upfront fees payment over the next 5 years of the debenture and restricting the deduction in the previous year 23-24 to 1/5 of the upfront payment is not correct. The assessing or the company is eligible to claim the entire amount. Now, even though Taparia Tools Supreme Court decision does say this, practically in the market, most of the people will spread it over. People are not very proactive on this because they feel anyway the debenture is worth 5 years. There is no point of me claiming everything in the first year itself. There is no point of me claiming it in the first year itself. So most of the people in the market will still claim it over 5 years. It is only those aggressive kind of assessees. It's only those aggressive kind of assessees who want to fight with the government. Will follow this rule and will allow it over the first year itself. Can you allow? Yes, because it is a Supreme Court decision. Logically, from an exam perspective, what I told you holds good. Which means if you see any kind of item where there is a fixed period, it is okay for you to allow it over 5 years or respective years. Clear, not clear? Yes. For this alone, you have to make an exception. You can claim the whole thing. I hope you are marking down the answers in your books. Okay. Please ensure that you write the answers. There is no answers in your written printed copy. But yes, I have given you the answers in a soft copy. So if you feel like you cannot write it down, you can notice the soft copy also. My recommendation, keep noting it down. Can we go for? Yes. Next one. Examine the taxability or allowability of the following receipts or expenditures under the provisions of Income Tax Act for the assessment year 24-25. And now we are coming to the questions. Tell me whether it is allowed, not allowed. Okay. Yes. First item. Secret commission was paid in the previous year 23-24. Allowed, not allowed. Quickly, 10 seconds. Everyone. Secret commission. Allowed, not allowed? Not allowed. Why, ma?
So under 37 is not.
Under 37, secret commission is not given. The reason why it is not allowed is the question. Secret commission is nothing but bribe. It is a payment made for illegal nature. Next, P Limited paid dollars equivalent to 50 lakhs as sale commission for the year ended 31st March 24 without deducting tax at source to Mr. Rodriguez, a citizen of UK and a non-resident who acted as an agent for booking orders for various customers who are outside India. I'm saying there is a person called P Limited who is paying dollars equivalent to 50 lakhs as sale commission for the year ended 31st March 2024 without deducting tax at source to Mr. Rodriguez. A citizen of UK and a non-resident who acted as an agent for booking orders from various customers who are outside India. So you had made a payment of sale commission to a non-resident, you forgot to deduct TDS. Now I know you people will jump and come and say Rahul, TDS not deducted, therefore fully disallowed. Understand, when I was discussing the chapter, I also came and told you, you only need to deduct TDS on those items where TDS is applicable. This is a payment of sale commission. This sale commission is not taxable in India. Because this is not an FTS. Understand, for a non-resident, the only items which are taxable in India are fees for royalty, fees for technical services, interest, and a few other items which are there under Section 9. Export commission are not covered under taxability in India, and therefore these items were anyway not taxable in India. If sale commission was anyway not taxable in India, are you liable to deduct TDS? Not liable to deduct TDS. Are you liable? Not liable. I am not liable. If I am not liable, will I disallow something? Not disallow something. I will not disallow. Rahul, how would I know this in exam and all? When we do TDS chapter, you will understand. Don't worry about it right now. Hey, sorry, this is allowed. When we do TDS chapter, you will understand. Yes or no? Yes, Rahul, what is the case law? This case law is a foreign agent of an Indian exporter exports in his own country and no part of the income accrues or arises in India. His commission is usually remitted directly to him and is therefore not received by him or on his behalf in India. The commission paid to the non-resident agent from services rendered outside India is therefore not chargeable to tax in India. Since the commission income for booking orders by a non-resident who remains outside India is not subject to tax in India, disallowance under 40AI is not attracted in respect of the payments of such commission to such non-resident outside India, even though tax is not deducted at source. Therefore, the amount of 50 lakhs which is remitted to Rodriguez outside India in foreign currency towards commission is not attracting the disallowance under section 40AI. Is not allowing any section 40AI. If I have to remember the case law properly, my understanding is this case law was Faiz on shoes. Okay, it is not there in the study material, but it is there practically. Practically, the case law which is there is Faiz on shoes, or it is called as Reebok. I think Reebok India or Faiz on shoes. These case laws basically came and clarified that when you make a payment of sales export commission, these payments are not taxable in India for the non-resident, and therefore TDS is not required. Next, yes. Can the following transactions be covered under 43B for disallowance? First item is a bank guarantee which is given by the company towards disputed tax liabilities. Bank guarantee is given by the employee. So basically what happened is you had some tax to pay, but that was under dispute. To safeguard yourself, you have taken a bank guarantee. And you want to claim this as a deduction. Can you claim it as a deduction? No, because very good. Just because you give a guarantee does not mean there is an actual payment. Yes. So it says for claiming deduction of any expense enumerated under 43B, the requirement is that the actual payment should be made and not the deemed payment. Furnishing of bank guarantee cannot be equated with an actual payment. Actual payment requires that the money should flow from the assessee to the public exchequer as per specified in 43B. Therefore, the deduction of the expense cannot be claimed by merely furnishing a bank guarantee. It is a case of McDowell and Co. Supreme Court decision. Next, it says interest payable to Goods and Service Tax Department but not paid before the due date. Allowed, not allowed? Not allowed. Why, ma? When we discuss taxes, we said tax, interest, fees, cess, surcharge, everything. Yes. So which means any interest payable to government of GST department is also covered under the clause. Since it is not paid on time, this will be disallowed. So both the cases are disallowed. Yes or no? Can we go forward? Next. A Limited paid IDBI, a public financial institution, a lump sum prepayment premium of 1.2 lakhs on 7/4/2023 for restructuring its debts and reducing its rate of interest. It claimed the entire sum as business expenditure for the assessment year 23-24. The assessing officer, however, held that the prepayment premium should be amortized over a period of 10 years, being the tenure of the restructured loan, and thus only allowed 10% of the prepayment premium in previous year 23-24. You are required to discuss with reasons whether the contention of assessing officer is correct or not. Yes. So basically what has happened is you have taken a debt. For the debt you have to pay an one-time upfront fees of 1.2 lakhs. Upfront fees of prepayment premium. You have claimed the whole 1.2 lakhs as a deduction in the year of payment, but assessing officer is saying the loan is for 10 years, therefore I will allow it over 10 years. Who is right? Quickly, who is right? Why, ma? Because you know the life of the debenture. Okay. Understand, I think you're missing out one accounts. You're missing out the accounts properly. Notice carefully, when we did zero coupon bonds, when we did the expenditure part and everything, we were talking about one expenditure which was supposed to be for multiple years and therefore was amortized. Look at the expense here. What is this expense? It is called as an prepayment upfront fee. Prepayment lump sum upfront fee. When the moment you use prepayment lump sum upfront fee, it means the liability to pay this money was always there on the first day only, or was it there over the years? It was always there on the first day only. Yes, which means the moment you created this lump sum premium, you were supposed to pay the money that time itself. Okay, this is like me coming and saying that Rahul, I've taken a loan. When I take a loan, generally in banks and all, they'll ask me something called as processing charges. Yes or no? So tomorrow if you go and make the payment of processing charges to the bank, just because the loan is there for 20 years, will you take the processing charge and allow it over 20 years? No. You will say, Rahul, processing charge I was supposed to pay on the first day itself, so I am paying it on the first day itself. Yes or no? So that time, will you allow it as a reduction? Yes, logic is the same. Logic is the same. Understand, just because you have a tenure does not mean everything will be amortized over the tenure. Okay, the tenure should make sense along with the expense also. Expenses should be something which makes sense over the tenure. Upfront fees is an upfront fees. You have to pay it one time go. You have to pay it one time go. So you can claim it as a full deduction in the first year itself, which means who is right? Assessee is right. Read the question. It says, the issue came up before the Delhi High Court in the case of CIT versus Gujarat Guardian. The court observed that the assessee's company's claim for deduction has to be allowed in one lump sum, keeping in view the provisions of 43B subsection D, which provides that any sum payable by the assessee as an interest on any loan or borrowing for any financial institution shall be allowed to the assessee in the previous year in which the payment is made, irrespective of the periods in which the liability to pay such sum is incurred by the assessee according to the method of accounting regularly followed by assessee. The High Court concurred with the tribunal's view supporting the assessee in terms of 3613, read with section 2, clause 28A. The deduction for prepayment premium was allowable. Since there was no dispute that the prepayment premium was nothing but interest and that it was to be paid to public financial institutions, which is IDBI, the court held that in terms of 43B clause D, the assessee's claim for deduction has to be allowed in the year in which the whole payment is actually made. Therefore, applying the ratio of the case, the contention of A limited is correct and that of the assessing officer is not. And that the assessing officer is not. Clear? Yes. So keep in mind as to what expense are you talking about. Does this expense really make sense over the years? Does it make sense over the years? The reason I am telling you this is because the same example in Ind AS, for those who have already done your classes on Ind AS would realize that the processing charge which I spoke about, in accounting standards, you would have claimed the whole processing charges as reduction today. And you will take the actual loan in the future. Ind AS Puerto Rico, the useless standards come and say the processing charge should be amortized over the period. So Ind AS works differently from AS. So if you were following an Ind AS accounts where the company has taken a loan and for the loan they have paid processing charge, in Ind AS you will amortize the processing charge over the period, but in AS you will ignore that accountings and you will allow it in the first year itself, which means in income tax also you should allow it in the first year itself. So which means Ind AS you would have amortized, income tax you will claim the full thing in the first year itself, because the charge was pertaining to the first year alone. Yes or no? Yes. For if you didn't understand, you have this standard called as borrowing cost. In Ind AS borrowing cost, you will realize. If at all any processing charges are paid, that processing charge gets amortized over the period of the loan. I can teach you all those things, but it's a little too complicated for me to tell you right now. If you have not done Ind AS right now, let's not discuss about it. When we do ICDS, I'll give you a hint. Next. Examine the tax treatment of emergency spares which are acquired during the previous year, which even though kept ready for use, have not been actually used during the previous year. They are coming and saying, I have some machinery spares, I have not to put to use the asset, but it is ready to use. Can I claim depreciation? Yes. Why? Because it's a passive use asset. If it's a passive use asset, you are eligible for deduction. See, as per ICDS 5 on tangible fixed assets, machinery spares shall be charged to revenue as and when consumed. When such spares can only be used in connection of an item of intangible fixed assets and their use is expected to be irregular, they shall be capitalized. Where the spares are capitalized as per the above requirement, the issue as to the provision of depreciation arises. Whether depreciation can be provided on such spares when they are kept ready, or is it necessary that they are actually put to use? The issue came up with Delhi High Court in the case of CIT versus Insilco Limited. The court observed that the expression used for the purpose of business appearing in section 32 should also be taken into account for emergency spares, which even though are not ready to use, yet are consumed or used during the relevant period. This is because that the spares are specific to a fixed assets, naming plant and machinery, and form an integral part of the fixed assets. These spares will on probability be useless once the assets are discarded and will also have to be disposed of. In this sense, the concept of passive use which applies to the standby machinery will also apply to emergency spares. Therefore, once the spares are considered as emergency spares required for plant and machinery, the assessee would be entitled to capitalize the entire cost of such spares and claim depreciation thereon. One of the conditions of claim of depreciation is that the asset must be used for the purpose of business or profession. In the past, courts have held that in certain circumstances, assets can be said to be in use even when it is kept ready for use. For example, depreciation can be claimed by a transport company on a spare engine kept in store in case of need, though they have not been actually used by the company. Hence, in such cases, the term use embraces both active use and passive use. Short form of the story, any kind of passive use assets, you can claim depreciation. You can claim depreciation. I am making it very clear once in a while and again and again. If you see a case law in the question bank, ignore the case law. Ignore the case law. These are not coming for exam. The only case laws which are coming in exam are the ones which I discuss in the book, in the blue color table. In the blue color table, apart from that, any case laws are just for reference purposes, will not be coming in exam. You only need to know the logics. You only need to know the logics. Clear? Can we go forward? Yes. Yes. A corporation was set up by the state government, transferring all the buses which is owned by it for a consideration of 75 lakhs, which was discharged by the corporation by issuing equity shares. So I have bought the buses of a corporation. In exchange, I gave them shares. In exchange, I gave them shares. Entry would have been bus account debit to share capital account. Yes. The corporation in its assets claimed the corporation in its assessment claimed depreciation. In its assessment claimed depreciation. Can the depreciation be denied in the corporation's hand on the ground that there was no registration of buses in the name of corporation? In the name of corporation, basically what happened is one person bought some bus. One person bought some bus. He gave the bus to another person. He gave the bus to another person in exchange for shares. In exchange for shares. The registration was still not complete. The registration was still not complete, but he wanted to claim depreciation because he has paid money for it. He has paid money for it. Assessing officer came and said, no, I will not give you the depreciation because the asset is not in your name. The asset is not in your name. Question to you, can you claim depreciation, not claim depreciation? Can you claim depreciation, not claim depreciation? Why? He doesn't? Okay, question to you. For you to own the title, is it important that the name should be in your name, or is it enough that you are the payer of the person? Name is important? It's not important. Understand? When I said that you should be the owner of the asset, I never told you that you should have the name on the asset also. Okay? Ownership comes by your transferring your risk and rewards. By transferring your risk and rewards and completing your consideration. Has the person completed his consideration? Yes, he has given shares. So, which means payment is done. He has got the full ownership. The only thing which is pending is title. Just because your name is not there on the document does not mean that you are not the owner. Does not mean that you are not the owner. If you remember, we did a case law called ICDS. We did a case law called ICDS where I came and told you, even if you take the asset in the name of the director, the company can still claim depreciation because the owner is company. Tomorrow they can take it back from the director also. So your ownership is important, your title is not important. Can you claim depreciation, Rahul? Yes, you can claim depreciation. Yes, you can claim depreciation. Yes. The decision of the Supreme Court in the case of Mysore Minerals is relevant in the context of the facts stated. The terms asset used in section 32 must be assigned to a wider meaning, and anyone in possession of the property in his own title exercising dominion over the property to the exclusion of others and having the right to use and enjoy it must be taken as the owner. Understand, title is not important. If I have the ownership, I have the dominance of the asset, I can avoid someone else to use the asset and I can give a decision on the asset, then I am the owner of the asset. Registration of the buses is only a formality to perfect the title and does not bar enjoyment. The corporation therefore cannot be denied the depreciation on the buses. A similar decision was also taken in CIT versus J&K Tourism Development Corporation. J&K Development Tourism Corporation. Yes or no? Yes. So title is not important. Your ownership is important. Clear? Can we go forward? Next. Ravi succeeded to his father's business in the year 2021. In the previous year 23-24. In the previous year 23-24, Ravi had written off the balance in the name of Y which related to the supply made by his father. which related to the supply made by his father when he carried on business. So basically there was a person who was running the business. His son took over the business. When the father was doing the business, he told that I have to receive some 1 lakh rupees from Y. After Ravi took over, Ravi came and said this person will not pay me the money, so he wrote it off as bad debts. The question which then came up is the bad debts which has been written off can be claimed by Ravi or can be claimed by the father. The reason why they're asking this is because Ravi is now the new owner of the business. When the income was offered to tax, it was offered by father. But the claim is made by Ravi. So assessing officer came and said, boss, the father made the income claim. So father should only make the expense claim. You are not the income claimer. So therefore, can you claim depreciation is the question. Can you claim the deduction is the question. Understand, there is a succession which has happened. Look at the heading. It says it is succeeded, which means who is the new owner of the business? Ravi. Okay, the person has changed from the father to Ravi. That does not change the fact that the business is still alive. Deduction and income offering happened in the business. So it doesn't matter who's the ultimate owner. Ravi can claim the deduction. That doesn't make any sense for owner to claim the deduction because father has retired. If father has retired, you cannot come and tell the father to claim the deduction because he has no Pgbp. Yes or no? So can Ravi claim the deduction? Yes. The deduction of bad debts is allowed even if it is written off in the books of accounts of the assessee. In this case, Ravi succeeded the business of his father. Under clause 7 of section 36(1), the amount has been written off in the books of accounts as irrecoverable. Is eligible for deduction provided the debt has been taken into account in computing the income of the business in any previous years. Therefore, Ravi is eligible for deduction in respect of the amount due in name of Y, which is written off in the books of accounts as bad debts, even though the debt represents the amount due for supplies made by the previous owner, which is nothing but the deceased father of Ravi. Case law is Veerabhadra Rao and Koteshwar Rao and Co. Veerabhadra Rao is the son and the Koteshwar Rao is the father. Yes or no? Yes. None of the case laws are important. Logic is important. Can we go forward? Next. Perfect. What we're going to do is we're going to start with sums now. Okay. These were all the illustrations which I had. Now what we're going to do is we're going to start with sums. We're going to do some Pgbp sums. Yes or no? Let's do some Pgbp sums. Read the question along with me. I'm going to tell you how to approach a question in exam. So be very careful. Question comes and says, ILT Limited is engaged in the manufacturing of pipes and tubes. I'm going to stop here itself. There is one thing which I'm going to highlight now, which is called as manufacturing. The moment I saw the word manufacturing, I am now eligible for additional depreciation. The profit and loss of the company for the year ended 24 is given as 405 lakhs. This is your starting point. Next, the following information and particulars are furnished by you. You are required to compute the total income. What do they want? Understand, they don't want Pgbp, they want total income. Golden rule number 1. Identify the requirement of the question. Yes, indicating the reasons for such treatment, assuming that the company has not opted for 115BAA or BAB. The company is not opting for 115BAA or BAB, which means you are doing normal provisions. First one. A group free air ticket was provided. First of all, hold. The profit and loss of the company includes a net profit of 405 lakhs. Then they say the following information and particulars are furnished by you. At no point of time have they come and told what is happening, whether these items are already there in net profit or not there in net profit. Which means you need to read each and every item one by one, check whether it is there in net profit or not there in net profit. Basis that you have to make a decision. Let's be very clear. Let's read the line properly. Yes, first item. It says a group free air ticket was provided by a supplier for reaching a certain amount of volume of purchase during the financial year 23-24. What have you got? You have got a group free air ticket from your supplier. Is it a gift or not a gift? Is it a gift or not a gift? It is a gift. Given during the course of business or during the course of employment? During the course of business. Pgbp, not Pgbp. Pgbp, taxable, not taxable. Taxable. I told you any kind of benefits or perquisites given by a person during the course of business is taxable. So therefore this is taxable. The same is encashed by the company for 10 lakhs. So now you know what is the gift amount. What is the gift amount? 10 lakhs. In April 2023 and was credited to general reserve account. The money which you got, you directly put it off to general reserve account, which means it is there in the net profit, not there in the net profit. It is there in the net profit, not there in the net profit. It is not there in the net profit. If it is not there in the net profit, will you leave it off or will you add it? You will add. So the first adjustment is an addition or disallowance. It's an addition. So how much will I add back? I will add 10 lakhs. Clear? You understand how the approach is? Understand how the approach is? Look at it carefully. Next, a regular supplier of raw materials has agreed for a settlement of 8 lakhs instead of 10 lakhs. Who is he? Supplier, which means you were supposed to pay 10 lakhs or you were supposed to pay 8 lakhs. You were supposed to pay 10 lakhs. Now he is ready to give you only 8 lakhs, which means he is going to waive off 2 lakhs. He is going to waive off 2 lakhs. If he is going to waive off 2 lakhs, this will be a profit for you, not profit for you. It will be a profit for you. So what is happening? A regular supplier of raw materials has agreed for settlement of 8 lakhs instead of 10 lakhs for poor quality of materials which is supplied during the previous year. The effect of which has not been given in the running account of supplier. The effect of which is not given in the running account of supplier. You know that you have to pay less. But you have forgot to pass the entry. Will income tax be happy? Not be happy. Will income tax be happy? Not be happy. Income tax will not be happy. Income tax will come and say, I want more income. So therefore, how much will I offer to tax? 2 lakhs. Addition, disallowance. Addition. This is an addition. Again, disallowance only happens if there is something in the P&L, Britannia. This is not happening in the P&L, therefore it is an addition. Let me know if you have a confusion. We'll do it again. Yeah. Yes, so this 2 lakhs will be added to the P&L. Clear? Can we go forward? Next. Andhra Bank has sanctioned and disbursed a term loan in the financial year 2021. 2021, your previous year or earlier previous year? Earlier previous year. So I have disbursed a term loan of 2021 left 50 lakh rupees. Interest of 8 lakhs was in arrears. If you had arrears of interest of 8 lakh rupees, would you have got it as deduction in the past years or not got it as deduction? Would you have got it as deduction, not got it as deduction? I would have not got it as deduction because it would have been disallowed under 43B. The bank has converted the arrears interest into a new loan which is repayable in 10 equal installments. Which means I have told that Rahul, 8 lakhs of interest, I am going to pay it in 10 equal installments, which means per installment I will pay 80,000. During the year, the company has paid 2 installments and the amount so paid has been reduced from the funded interest in the balance sheet. Now I am coming and saying that Rahul, I had to claim some deduction. In the past years, I disallowed whole 8 lakhs. This whole 8 lakhs I have now converted into a loan of 10 installments. In this I have paid 2 installments. So current year how much have I paid, Rahul? I have paid 1,60,000. Now this 1,60,000 is there in the P&L, not there in the P&L. Is it there in the P&L? Not there in the P&L. It says it is passed in the funded account of balance sheet. So which means it is not there in the P&L. Now question to you, did you disallow it in the past? Yes. Have you paid it in the current year? Yes. Can you claim it as a deduction? Yes. Therefore, this will be how much? 1,60,000. Reduced allowed. This is allowed. Reduced means it should be there and you remove it. Allowed means you are freshly claiming. Is it there in the P&L? No. So therefore you are making a fresh claim. Yes or no? Can we go forward? Next one. The company has remitted 5 lakhs as interest to company incorporated in USA on a loan taken 2 years back. On a loan taken 2 years back. The tax deducted under 195 from such interest has been deposited by the company only in 15th July 2024. 15th July 2024. Question to you. You have paid the money in the previous year 23-24 or 24-25. Have you paid the interest in 23-24 or 24-25? Check. No, what is the date? 15 July 24 is 24-25. So which means TDS has been paid after the previous year or before the previous year? After the previous year. But the question says, so the said interest was debited in profit and loss account. The said interest was debited in profit and loss account, which means they had debited in previous year 23-24. Now the question which has come to you is, Rahul, I have deducted an expense in 23-24. Tax of it is paid in 15th July. Tax of it is paid in 15th July. A, have you paid it within the due date or after the due date? You have paid it within the due date. You have time until 31st October. You have time until 31st October. You have paid it within the due date, which means you have satisfied condition, not satisfied condition. Satisfied condition. It is already there in the P&L, not there in the P&L. Already there in the P&L. So should you allow, not allow? I will ignore it off. I will ignore it off because it is allowed as a deduction. It is already there in the P&L. Therefore, no adjustment to make. Therefore, no adjustment to make. The adjustment will be 0. The adjustment will be 0. Yes or no? Yes or no? Can we go forward? Can we go forward? Next. Sandeep is a sales executive stationed at the HO in Delhi. He is on an official tour to Bangalore from 31st May 2023 to 18th June 2023. And from 28th September 2023 to 15th October 2023 for the business development. For the business development, the company has paid Sandeep's salary in cash. In cash. Now there is a problem. There is a problem. You have paid expense in cash. What is the problem, Rahul? What is the problem? You cannot make a payment in cash more than 10,000 one person one day, except for some cases. Except for some cases. One of the case was employee deputed for more than 15 days where there is no bank account. Where there is no bank account. So let's check what happens. Let's check what happens. The company has paid Sandeep's salary in cash from its local office in Bangalore for the month of May and September, amounting to 45,000 and 47,000, which is net of TDS and other deductions. Mr. Sandeep has no bank account in Bangalore. Mr. Sandeep has no bank account in Bangalore. A, Sandeep has no bank account. Allowed, not allowed? Allowed. Will you disallow something? Will you disallow something? Which means the salary which is paid to him is allowed as deduction, not allowed as deduction? Allowed as deduction. Question says these were included in the salary debited in profit and loss account, which means they have claimed or not claimed? They have claimed. Can you allow the claim, not allow the claim? Will you allow the claim, not allow the claim? You will allow the claim, which means you should disallow, add, reduce or allow. You will ignore it. Very good. It is neither of the four. You will ignore it because the condition is already satisfied. You will ignore the same. You will ignore the same. Yes or no? Yes or no? Next. The company has contributed 50,000 by account paycheck to an electoral trust and the same stands in the head of general expenses. You have contributed 15,000 to an electoral trust. Allowed, not allowed? Do you know what is electoral trust? Do you know what is an electoral trust? Electoral trust is a political party trust. Electoral trust is a political party trust. Can you make a contribution to 50,000 of political party? Can you make 50,000 contribution to political party? No, because it is a donation. It is a donation. Allowed, not allowed? Not allowed. It is there in the P&L, not there in the P&L? There in the P&L. So what will you do? You will, very good, you will disallow. You will disallow. Hey, yes or no? Yes or no? Does the question now looks easy? Does the question now looks easy? Yes, you need to understand what is happening. You need to understand what the provision is, and then you need to make a treatment decision. Then you make the treatment decision. Clear? Yes. Next question we will solve in the book. Next question we will solve in the book. You will use the treatment logic. You will use the treatment logic. Yes. Let's solve the next question. Is there one more question or this is the last question? There's one more question. Okay, let's solve the other question. Okay, what is this question? Where is it? This question, no? Okay, perfect. Yes, we're looking at the question. Now, the question like this is what you can expect in exams. The only difference is this is more for this is a company, right? Perfect. So questions like this is what will come in exam. You need to be extremely careful. You need to be extremely careful. This is what kind of questions which will come in exam. There is a little different approach. I'm not saying the approach is changed. The approach is the same which we did last question. The approach is a little different for this to understand things better. Okay. So I'll read the question and then I'll tell you the approach also. And then I'll tell you the approach also. Can we? Yes. The question says the trading and profit and loss account of Pingu Private Limited. Pingu Trading Private Limited. Now I saw the word trading. The moment I saw the word trading, I mean, what do I know? What do I know? There is no additional depreciation. There is no additional depreciation. So life is safe here. Life is safe here. Now the problem is, it says the trading and profit and loss account of Pingu Trading Private Limited has a business of agricultural produce, consumer items, and other products. Now, some people may look at this word agricultural produce and start thinking Rahul 40, 60, 60, 40, 30, 35, 75. No. Understand, this person is in trading, which means his job is only to buy the product and give the product. He is not into agriculture. That will not come. The hint itself is on the fact that they say agricultural produce, consumer items, and other products, which means the person is doing multiple things. Which means agriculture is not important. Yes or no? Yes. So I am saying that the person is having a trading and profit and loss account. The year ended is 31st March 2024. Now you see a trading account also, you see a profit and loss account also. Yes. As a starting point, never jump to the next part. When you see one big para which says the following is a profit and loss account, without even looking at the adjustments, first go and check what does the question want from you. First itself go and jump what the question is want from you. Now in the earlier question, if you notice, I did not have to do it, because the moment I start the question in the first line itself came and said you are required to compute the total income, which means the requirement of the question was there in the first line itself. So I didn't have to worry. In this question, is the requirement given to you? No. So therefore what I'll do is I will ignore the table and directly jump to the last line. Come to the last line. The question says you are required to compute the income chargeable under the head assessment year 24-25 for the Pingu Private Limited, ignoring MAT and section 115BAA. Always look at the last line. Find the requirement of the question before you jump. Because please understand, had this question somewhere not come and told ignoring MAT or 115BAA, you would have never done the normal rules. You would have had to do 115BAA. You will never be able to find that out unless and until you know the first. Okay, so the point is very simple. Rule number 1, whenever you start a question, see what does the requirement of the question is. If it is given in the first para itself, follow that. If it is not given, jump the para, go to the last para. Find it there first. With this only you will be able to know what you want to do. Now in this question I want to do income chargeable to tax, which means do I have to do Pgbp or do I have to do the whole thing? I have to do the whole thing. So two things I know. I have to do income chargeable to tax and I have to do it as per default regime. Yes. Now let's go back to the question. Rule number 2. Whenever you are given a trading P&L, balance sheet and all those things, always start from the right side. Knowing the income first is better, so that you can automatically take care of the expense. If you find out that you have a certain income which does not form part of Pgbp, Corresponding expense also has to be reduced. Yes or no? So it is always good to start from right side. It always good to start from right side. Yes or no? So let's start from right side. Let's start from right side. Trading account, right side, sales. PGBP, not PGBP. No problem. Closing stock, PGBP. Opening stock, PGBP. Purchases, PGBP. Freight and carriage, PGBP. Nothing has to change. Nothing has to change. Coming to P&L account. Coming to P&L account. Gross profit, balancing figure. It's not a PGBP item. It's a balancing figure. It is a balancing figure. Next, income tax refund. IFOS. So therefore, I'm going to put OS on the bottom and I'm going to say, boss, not a part of PGBP. I'll move it somewhere else. I'll move it somewhere else. Then warehousing charges. Now, notice carefully, warehousing charges is an income or expense? It's an income. It is an income. Now, the problem is warehousing charges being an income simply means that you have given your warehouse on rent, which means what you have got in hand is HP. Rahul, it is a warehouse. No, how is it HP? It is a HP. Understand? HP comes and says any house. House means any land and 4 walls. Any land and 4 walls. Is the person in the business of giving warehouse on rent? No. The person is in the business of trading, which means is this his main business or side business? Side business. If this is a side business, it has to go to HP. It has to go to HP. Yes. Now, if on the left side you find any expenses relating to warehouse, you will move that expense also to HP. Yes, that is why always start from right side. Always start from right side. Now, let's come to left side. Let's come to left side. Look at the items. Tell me PGBP or non-PGBP. Okay. Bonus to staff. Allowed, not allowed? Allowed. Rent to premises. Allowed, not allowed? Allowed. Advertisement. PGBP. Allowed, not allowed? Allowed. Bad debts. PGBP. Allowed, not allowed? Allowed. Interest on loans. As of now, nothing given. PGBP. Therefore, allowed. Depreciation. PGBP. Allowed, not allowed? Not allowed. Why, Rahul? Hey, this is accounts. Do I look at accounts? No. I told you depreciation as per accounts should be disallowed. Next, GST demand paid. GST demand paid. PGBP, non-PGBP? PGBP. Allowed, not allowed? Allowed. It is a demand, which means you have paid tax. You have paid tax. You have not paid the penalty, which means taxes allowed. Taxes allowed. Miscellaneous expense. PGBP. Allowed, not allowed? Allowed. Net profit. This is your starting point. This is your starting point. It's not a balancing figure. This is your starting point. You will start your PGBP from net profit. Now, with this itself, you now know the moment you start net profit, you need to remove 2 items, which is income tax refund and warehousing, and you need to add depreciation. You need to add depreciation. Yes or no? Yes or no? This is how you approach a question. This is how you approach a question. Can we do the balance additional information? Let's do additional information. It says, on the scrutiny of records, the following information were extracted and gathered. On a survey conducted under section 133A on the business premises on 31st March 2024, it was revealed that the value of the closing stock as on 31st March 2023, 31st March 2023, 31st March 2023 is your previous year or previous year? It is your previous year, which means this is your opening stock or closing stock? This is your opening stock. They are saying the value of the closing stocks of 31st March 23, which means current year opening stock is 8,75,000. Current year opening stock is 8,75,000 and a sales was made on 13th March 2024 were not recorded in the books of accounts. So they are saying that the opening stock, which is 3,75,000, the opening stock which is 3,75,000 should have actually been 8,75,000. Should have actually been 8,75,000, which means, is your stock undervalued or overvalued? Your stock is undervalued. Hey, opening stock, if the opening stock is undervalued, will your profit come down or profit increase? Will your profit come down or profit increase? Your profit will come down. Your profit will come down. It's opening stock, so profit will come down. Yes, how much will it come down, Rahul? 3,75,000 was the opening stock. 8,75,000 is the revised opening stock, which means 5 lakhs will come down. 5 lakhs will come down. Then, and a sale of 75,000 was made on. The sale of 75,000 was made on 13th March 2024, was not recorded in the books of accounts, which means this sale which you have, is it undervalued or overvalued? Undervalued. How much is undervalued? 75,000. So you need to add 75,000. Yes or no? Yes or no? You need to add 75,000. They are saying the value of the closing stocks after considering this fact and on the basis of the inventory prepared by the department worked out to be 12,50,000. So they are saying, Rahul, opening stock 5 lakhs was short. Closing stock actually should be 12,50,000, but closing stock is 4,50,000, which means closing stock also should be increased by 8 lakhs. Yes, now tell me, opening stock you are going to increase by 5 lakhs. Closing stock you are going to increase by 8 lakhs, which means technically profit will increase by 8 lakh, but profit will come down by 5 lakh. Net profit will increase by 3 lakhs. And then there will be a sale of 75,000. So totally I have to add 3,75,000 to my net profit. Yes or yes? Yes. So total addition to net profit is 3,75,000. Yes or no? Yes. You understand how to approach it? You understand how to approach it? Next. Income tax refund includes amount of 4,570 of interest allowed thereon. So they're saying, Rahul, actually income tax refund which is there, no, that is full of my money which I have come back. That is full of my money which has come back. In that money, 4,750 is interest, balance is actual principal. Balance is actual principal. Now from Pgbp, how much will you reduce? You will reduce the full 50,000. But when you go to IFOS, will you offer to tax 50,000? Will you offer to tax 50,000? No, you will offer to tax only 4,750. Why, Rahul, you will only offer 4,750? Hey, the balance amount is your taxes paid got back to you. Your taxes paid got back to you. Is that an interest? No. Is it an income? No. Which means in Pgbp you will reduce the whole 50,000, but in IFOS you will add back only 4,750. You will add back only 4,750. Yes or no? Yes or no? Next. Bonus to staff includes 7,500, which is paid in the month of December 2023. Which was paid in December 2023, which was provided in the books on 31st March 2023. Which was provided in books on 31st March 2023. 31st March 2023 is your previous year or previous year? It is previous year. So previous year there was a bonus payable. Which you paid in December 23. What does it mean? Last year when you wanted to claim the expense, you could not claim the expense because it was paid after the due date of return filing. Yes, but if you have paid it after the return filing due date, you can claim it in the current year in the year of payment. So current year, can you claim, not claim? Current year you can claim, which means current year you can claim a deduction. Now question says bonus to staff includes, which means is this number already claimed in the P&L, not claimed in the P&L? Already claimed in the P&L. Should you allow, not allow, disallow or add? You will ignore. Hey, you're getting the hang of it? Yes. Next. Rent of the premises includes 5,500, which is included on repairs. The assessee was under no obligation to incur such expense as per rent agreement. So I have taken a property on rent. There were some damages happened, so I had to incur some rent cost. I was under no obligation to do it, but I still did it. Does it make an impact? First of all, is it revenue or capital? It is revenue. Allowed, not allowed? Allowed. Ignore or add? I will ignore because it is already there. Yes or no? Yes. Next. Advertisement expenses include an amount of 2,500 which is paid on advertisement published in souvenir issued by political party, the payment is made by account pay check. Hey, you have made an advertisement for political party. Allowed, not allowed? Allowed, not allowed? Not allowed. How much will you disallow, Rahul? You will disallow 2,500. You will disallow 2,500. Yes. Can we go forward? Next. Miscellaneous items are including. The miscellaneous items are there. No, for that they are saying miscellaneous items are including, and 15,000 which was paid towards penalty for non-fulfillment of delivery conditions of a contract of sale beyond control. So I have paid 15,000. This 15,000 is a penalty, but this penalty is not for a law. The penalty is for a contract. Allowed, not allowed? Allowed. Is it already there in P&L? Not there in P&L? Already there in P&L. What should you do? Ignore. You will ignore. Clear? Next. An amount of 1 lakh paid to the wife of a director who is working as a junior lawyer for taking an opinion on a disputed matter. You have paid money to the wife of a director. The junior advocate of high courts normally charge only 25,000 for the same opinion. So I have made a payment. I should have made only 25,000. I have made 1 lakh. Where am I going? Where am I going? Which section are we talking about? Very good. We're talking about 48. We're making of related persons. We're talking about related persons. There I told you, for a company, director is a related person. Director's relatives are also related person. So which means wife of director is covered, not covered? Covered. You should have made a payment of only 25,000. You made a payment of 1 lakh. What will happen? What will happen? You will disallow how much? Full 1 lakh or 25,000 or difference of both? You will disallow 75,000. You will disallow 75,000. Rahul, why am I disallowing only 75,000? Hey, 25,000 was genuine. 25,000 was genuine. Balance extra is unreasonable. Balance extra is unreasonable. Then amount of 1 lakh paid to electoral trust by check. Amount of 1 lakh paid by electoral trust. Sorry, paid to electoral trust by check. Disallowed. By donation. Can we go forward? Next. Goods and services tax demand paid include 5,300 charged as penalty for delayed filing and 12,750 towards interest for delay. Understand now how much is the amount? I am saying that the GST is 1,08,000. In that GST of 1,08,000, 5,300 is a penalty. 12,000 is interest. Balance is tax. Balance is tax. Question to you: 5,300 allowed? Not allowed? Not allowed, because it is penalty for offense of law. 12,750 allowed? Not allowed? Allowed. Why? Why? Because it is compensatory. Because it is compensatory, there is no penalty. There is no penalty. So only disallowance amount is 5,300. Yes. Next. The company has made an investment of 25 lakhs on the construction of warehouse in a rural area. Hey, now we are talking about the warehousing charge. Now we are talking about the warehousing charge. They are saying the company has made an investment of 25 lakhs on the construction of warehouse in rural area for the purpose of storage of agricultural produce. For the purpose of storage of agricultural produce. Warehouse storage agricultural produce. What is this? What is this? What is this? What is this? Warehouse created for storage of agricultural produce. எங்கேயோ படிச்சிருக்கோம். Where have we heard this? Warehouse agricultural produce. We have learnt it in 35 AD. Specified business. Any kind of warehouse created for storage of agricultural produce, sugar, will be 35 AD. Will be 35 AD. So they are saying that they have created a construction of warehouse for agricultural produce of 25 lakhs. This was made available for use on 15th September 2023, and the income from this activity is credited in the profit and loss account under the head warehousing charges. No. What has happened is you have created a warehouse for storage of agricultural produce. This has been given to someone. This has been given to someone on rent, and you have earned a rent of how much? 15 lakhs. You've earned a rent of 15 lakhs for the storage. This is being charged under warehousing charges. This is being charged under warehousing charges. Question now comes to you is, Rahul, can you consider this as business or should you still go with HP? Should you still go with HP? At this point of time, you can make an assumption. You can make an assumption because the activity has started in the current year. Because the activity has started in the current year, it looks like this can also be a business of the person. It looks like it can also be a business of the person. If that is the case, you will tax it under Pgbp. If not, you will move it to HP. If not, you will move it to HP. The only challenge which you have to keep in mind is if you put this under Pgbp, they have given you the cost of the warehouse. They have given you the cost of the warehouse, which means you need to charge depreciation. You need to charge depreciation. If you move it to HP, will you get depreciation? No. So your classification of head will make an impact. Your classification of head will make an impact. Let's see what ICA has done. ICA has come and took it as Pgbp. ICA has took it as they have taken it as Pgbp. They have taken it as Pgbp. Since they have taken it as Pgbp, they have formed it as specified business. They formed it as specified business. They made two assumptions. Assumption number one, they came and said this is Pgbp. Assumption number two, they came and said we want to claim 35 AD. We want to claim 35 AD. Ideally speaking, in these kind of questions, ICI is supposed to clarify to you that 35 AD is applicable, because I told you 35 AD is mandatory or optional. It is mandatory. It is mandatory. So therefore, ICI should have ideally come and told you that they are opting for 35 AD. In this question, you can make two assumptions. Assumption number one, you can say it is HP. In that case, nothing to worry. Assumption number two, you are coming and saying, no, Rahul, this is Pgbp. If you are telling it is Pgbp, then you have to make second assumption where you have to come and tell either it is 35 AD claimed or 35 AD not claimed. If you say, Rahul, 35 AD not claimed, in that case, 25 lakhs kamala, you will give depreciation. If you say, Rahul, 35 AD is claimed, in that case 25 lakhs will be fully allowed as deduction, 14 lakhs will be offset with it. 15 lakhs will be offset with it. Yes or no? Yes. Next. Depreciation under the Income Tax Act works out to 65,000. Now. Here is where you have to be careful. Notice very carefully. I told you, in a question, if they come and say depreciation as per Income Tax Act is 25,000, 65,000. One check which you can do is 25 lakhs is your building cost. 25 lakhs is your building cost into 10% will give you how much? 2,50,000. The building is used from 15th September, which means 100% depreciation. 100% depreciation, which means if at all they had to do it as per income tax, depreciation should have been at least 2,50,000. Yes or no? But depreciation is only 65,000, which means they are indirectly coming and clarifying to you that please don't claim depreciation on the asset. You either treat it as specified business or you move it to HP. See, indirectly they'll give you hints. Be very careful. This is a classic case of going to specified business. Which means depreciation Puerto Rico, you will disallow 71,500, you will allow 65,000. Yes or no? Can we go forward? Next, it says interest on loan includes an amount of 80,000 on which tax was not deducted. Now, what is the interest on loan given? 1,67,500. Out of that 1,67,500, 80,000 there is no TDS. What will you do, Rahul? What will you do? Hey, TDS not deducted. Now, what is the issue? What is the issue if you don't deduct TDS? If you do not deduct TDS, 40AI comes into picture. 40AI comes and says if you have an expenditure for which you have not deducted TDS, the payment will be disallowed 100% for a non-resident, 30% for a resident. Hey, in this question, interest on loan, have they clarified whether it is from resident or non-resident? Not clarified. Therefore, it is assumed resident. If it is assumed resident, you will disallow 24,000. Why, Rahul? Because it is resident. Yes or no? Yes. See, this is how you do your question. In this case, let's make an assumption here also. I am going to claim the whole 25 lakhs. I'm going to claim the whole 25 lakhs, and on the top, the IFHP which I told, I'm going to remove the IFHP. I'm going to tell it as specified business. Now notice your loss is 25 lakhs. But the income is 15 lakhs. Technically meaning a loss of 10 lakhs. Now Rahul, this 10 lakhs, can you set off against your normal business? No. Specified business loss can be set off only against specified business income. Do you have any other specified business income? No. Therefore, you will carry forward. How many years? Infinite years. Rahul, 4 years is for speculative. It is not for specified. Clear? Yes. Now this is what the question is. What is your job here is, you are going to go home and solve the question. All plus and minus. I hope you have taken note of it. Have you taken note of it? Yes, please take a note of it. In case you have not taken note of it, take a note of the plus and minuses. You are going to go home and solve this question and show me. I will see your book tomorrow. Ritanya, I want to see the soft copy. Okay, I want to see the soft copy. I want to see how you write your answers. And then I will tell you what changes to make. Understand, beyond you writing an adjustment, it is more important for you to present your paper properly. Okay, so Ritanya, my request, please sit at home. This question, if you know the adjustments, I want you to solve the question and show me how you write the answer. Okay, exam format, I want to see the answer from you. I will tell you what changes to make in the format writing. Okay, anyway, in tomorrow's class we will discuss how to write the format once again, but I want to first see how you people write. Okay, then basis that we will discuss whether you are writing properly or should you make some changes to your formats. Clear, Ritanya? All right, perfect. We're out of time for today, so we'll close for the day. In tomorrow's class, what we're going to do is we're going to solve one more question, and then we're going to move to the theoretical part of the chapter. If time permits, we are also going to do ICDS. We are also going to start with ICDS. Yes, we are in day 16 is what my memory serves from what YouTube channel I have. So day 16, we are already done with Pgbp also. Okay, so we are at a very good pace right now. Pgbp mudinjichu. And if you are feeling confident about Pgbp, out of your 100 marks, 14 marks and the 10 marks has already come to you. Feel that kind of confidence, people. That is what is important. Keep practicing Pgbp. I'm not telling solve the same questions. Okay, keep thinking yourself. Every time when you come to the class, 5 minutes, look at one adjustment and think where and all this adjustment is there. Link yourself to multiple chapters. That is when you will read this chapter properly. Okay, Pgbp is supposed to become a very easy topic for you because it is a compulsory question. At any point of time, if you feel like there is any challenge, please feel free to reach out to me and close it off with me. Yes. All right. Thank you, people. Have a good day.